Hi ladies and gentlemen, this is Alvin from Dr. Wealth, and today I'm going to share about Alibaba and Tencent. Why are they interesting? Because their share price have corrected a little, especially after an IPO has failed, and we that the government is going to regulate the big tech in China to really reduce their monopolistic powers. So I want to take this opportunity to share whether they are good buys at this point in time. So let's go. The usual disclaimer, pause if you need to read it. Okay, so IPO was the biggest IPO that didn't happen. It was on track to raise $34.5 billion, right, at a 313 billion valuation. This 34.5 billion is a record high if it happened, but it didn't. So the previous record was held by Saudi Aramco, which was at $29 billion fundraise through the IPO, and it was very popular with over 872 times oversubscribed by individual investors in China. And the initial plan was to raise 30 billion. So in fact, they actually raised the amount even higher, right, due to the high interest. Okay, and that was based on a 225 initial IPO valuation. So that jumped up as well to 313. So you can see the immense interest in the end IPO, right? And that was a huge jump from the private funding round before they went for this IPO. It was only valued at 150. So it was like doubled from a private company to become a public company, right? And given the interest in the individuals, that's why they can command such a high IPO price. And we all know that it got put out, and there were many reasons to explain why it happened, right? So in general, there were two stances. So the first one is that people believe that the founder of Alibaba and as well as Ant Financial, Jack Ma, said something wrong during the major summit with the top officials in China, right? He was openly criticizing the old financial industry, how it is passé in this new operating environment, and why fintech is the future, right? So a lot of people were thinking that he said the wrong thing, and the Chinese government doesn't take criticism that well, and that's why they had to stop him from going for the IPO as a way to rein him in. There's also another stance, right? Another view, which is that the government was already about to regulate the fintech industry. He inject news about it. He just take the opportunity during this summit to voice his opinion about how to go forward from there. Right, so two different kind of opinions. I just want to drill down a little bit more, okay, to get the crux of the issue. Then we can know whether this would impact the Alibaba as well as Tencent going forward. So these are just some of the journalists' analysis that I picked up from various sources. So Katsuji Nakazawa analysis was that it was Jack Ma that said the wrong thing, okay, because the national news agency Xinhua News put up something when he was summoned for questioning. Alright, he put up on the official WeChat account with the headline, "Don't speak thoughtlessly, don't do as you please, people can't act on their free will." Right, so it was like a very cryptic kind of message. It wasn't really directing at Jack Ma, but it was just coincidentally being published on their WeChat account. Another more obvious, or I wouldn't say obvious, I would say another kind of analogy that went with the article was image, okay, of a horse shaped like a cloud in the sky, right, which is like Ma Yun, okay. So it looks something like this, right, the picture that they chose, okay. So Jack Ma's Chinese name is Ma Yun, right? Ma is horse and Yun is cloud in Chinese. So it's almost like trying to direct that article to the issue of Jack Ma saying the wrong thing, right? And you understand that Chinese culture is very high context communication. It's never so direct. You have to read between the lines and the layers of meaning that embed with it. So that's how this journalist think that it was Jack Ma that said the wrong thing. Alright, essentially he interpreted as Xi's message to Ma was, "You are nothing but a cloud," right, a passing cloud, something like this. Okay, so that was the first viewpoint. The second one was that Wall Street Journal also published this and said that it was President Xi Jinping that personally put out Jack Ma's IPO because he was the only one that had the powers to do so at the very last minute. Right, nobody else in China had that power. Okay, so that was being reported by Wall Street Journal, and another journalist, Henny Sender, he thinks that it's more overall, it's not just that Jack Ma said something wrong. All right, it does have some systemic risk, right? Because Ant Financial has become too big, so there was some systemic risk that the government does need to regulate it. Otherwise, disaster may happen thereafter. Okay, maybe the loans get bad, a lot of people get affected, and their money can't get back at the end of the day. So there is some systemic risk because Ant Financial has become too large. And he also recognized that there is some antagonism that's there, right? Of course, this means that he did anger the officials by saying the wrong things in the summit. And this is Kevin Shi, the blogger at Interconnected. So he went one step further, right? He does believe also in the sense that regulations were needed for fintech, and he pushed it further by saying that Jack Ma already know that it will happen. Okay, and he was using the summit as an opportunity to make a statement, right? And he said this, which he translated to English. Good innovation is not afraid of regulation, but is afraid of being subjected to yesterday's way to regulate. Instead of being regulated in yesterday's way passively, and is now actively part of the rule-making process. Okay, this part thereafter is by Kevin himself, right? He's arguing that actually Jack Ma is playing chess, okay, and now Ant Financial is able to work with the regulators to form the next generation of regulation, which is competitor like Tencent, Baidu, JD, Meituan, 360 and Xiaomi were not part of this regulation committee, right? So this guy Kevin is saying that Jack Ma is actually a lot more strategic in this. It's not a failure, but it was a move. All right, it was a move. Okay, so regardless, I guess there are many varying views that we went through just in the last few minutes, right? Some will say Jack Ma said the wrong thing. Some will say that Jack Ma was unhappy. He knew about the impending regulation and then he just criticized it. And then up to the point that even Kevin said that this was deliberate to attain a seat at the rule-setting table. Okay, so regardless what we think will happen, or what actually happens doesn't really matter because it has already happened. Okay, the IPO is put out, and going forward now we have to see what's there. What are the regulation outcome that will affect the China tech industry, and the market has already responded to it. Right, as we can see that Alibaba share price have corrected after the Ant Financial IPO was being scuppered, okay, and as well as Tencent as well, right? So just that it didn't correct as much because Tencent didn't have direct impact when Ant Financial don't go IPO. In fact, it might be good for Tencent because Tencent have very sizable fintech business within itself too. Okay, so these are the two largest fintech companies in China or even the world, right? Relatively, Ant Financial is larger than Tencent, okay, but Tencent is also quite huge by its own measure, right? So in terms of revenue, Ant Financial is larger, okay. In terms of payments, Ant Financial is larger, but in terms of micro lending, actually Tencent is larger, and in terms of asset management, Ant is larger, and insurance, Ant is also larger. Right, in terms of users, Tencent is more likely because of the WeChat ecosystem that it has built up over the years. Right, so these are the two big giants, and definitely any regulation will affect them, and these are big businesses. Right, contribution to both Alibaba as well as Tencent's business itself. Okay, so we should not take this lightly. All right. This is my view. Okay, impact we still don't know, right? How the regulations will pan out, how bad it will be. Likely the fintech will be required to put up more capital. They cannot lend out at higher rate. Maybe there's a ceiling. So basically they will make less money. All right, just how much less? Okay, so the impact is they will have less profits lah. Okay, right, just how much less. That we don't know. And I do think that reasonable regulations are necessary, right, to safeguard the system, because these two giants are super big already. They have very big influence on how the Chinese manage their finances, and you can't really let them do what they want. Okay, if they are, as companies, they would tend to be more profit driven. Okay, and the government is supposed to make sure that they don't abuse that power. So I think reasonable regulations and new regulations, okay, not using past regulations to regulate the fintechs. I think I agree with Jack Ma on that point as well. All right, and just remember that the peer-to-peer lending, there was a period that was booming in China. That was 2015, and a lot of people lost money. There were thousands and thousands of P2P companies. A lot of them just went bust. Okay, so that's why I do believe that reasonable regulation, not over regulations, but reasonable regulations are necessary. All right, so be it if the Alibaba and Tencent to make less money. Okay, as long as they toe the party line, right? This is the last point, which I think is important as well, because China operates differently from the rest of the world. The government has a say on everything. All right, and in Chinese culture, the face value is very important, right? You cannot criticize someone so publicly. Okay, it doesn't look nice on them, right? So they would want loyalty, okay, to the party. And so far, you see, whether is it Jack Ma or Pony Ma of Tencent, they have been in this game for decades, so they know how to deal with the regulators. They know how to deal with the government, right? They are not dumb, okay? Otherwise, they won't be able to build a business to this size today, right? So I believe that they will cooperate, okay, and they will be in business. Okay, so I do think that this is actually a good opportunity to invest if the price is right for Alibaba and Tencent. Okay, which we'll talk about it later, right? In terms of all these anti-monopolistic moves by the government, it's not a China unique thing. The West is also getting more and more anti-monopoly, right? A lot of Senate hearings with the big tech bosses, right, like your Google, Alphabet, Apple, Facebook, Amazon, all this, right? They are really having a lot of conversations and questioning, and people are suspecting that the US is likely going to have some regulations on this big tech. In fact, Europe has always been fining, right? Putting out fines on the big tech. Like the most recent one would be Amazon. The Europeans were accusing the Amazon for favoring their own products over third-party sellers, right? So they got fined for that. So it is not a China problem, all right? It is true that big tech today are very powerful, and some degree of regulation is necessary, okay? But not too much that they stifle their growth, all right? Talking about valuation, okay, so Alibaba had a correction, and this is the PE chart, right? Price earning chart. This is based on the trailing 12 months kind of earnings, okay, and this is 5 years, right, since 2015 to 2020. Okay, so how to read this is that the average PE ratio for Alibaba was around 40, right, and currently is around 36. Okay, around 36. So in this case, actually is below the fair value, right? The trading range, in terms of trading range, okay. Of course, if you can get it at one standard deviation lower, this is around 19, P 19, then that will be the best price, okay. But anything between 19 and 40 is reasonable in that sense. So in fact, the correction has put Alibaba in that kind of territory. All right, so it depends on how cheap you want, but at least you have some range reference for this. And this is Tencent, okay. The average is around 51, and currently is around 37. All right, so I also do verify some of this data with multiple sites. Okay, so in terms of the current PE for the trailing 12 months PE for Tencent, it's differing in different sites. So in this it shows 37. In other side, I see they are like 40s, some were in even like 50s. Right, it depends on when they update the earnings, which are the 12 months they have taken from. All right, so but regardless, okay, as long as below 50, it's still reasonable as well. So Tencent, both Tencent and Alibaba has been growing well, and I guess that's the reason why with the recent correction together, their prices are actually trading at a very reasonable valuations. Okay, so that's my view, right? I do think I'm still bullish on these two tech giants in China. I do think that this is just a temporary hiccup going forward. All right. So that's all for me today, and if you find it useful or not useful, just give us your feedback in the comments below. You like it, dislike it, just click on the YouTube button, right, so that we know what we can improve on going forward. Right, thanks for watching and good luck.